Turning to the global picture for stocks and rates, our next guest says political turmoil in Europe is creating more opportunities abroad. David Harrow, Harris Associates CIO, International Equities and Portfolio Manager, joins us now. David, great to talk with you as a company-by-company stock picker. When you see these macro moves like the decline in stocks in the French market, maybe the bond spreads blowing out in response to political turmoil, I guess it's got to surface some opportunities. How are you viewing it?
You know, I've been doing this since 1986, believe it or not, and we just go through these waves of political events that rock stock markets, whether it be elections or whatever you have. This political upheaval moves share prices quite aggressively. But the fact is, what it doesn't really move in most cases is the underlying company's ability to generate cash flow for its owners. And at Harris Oakmark, this is what we're looking at. We're looking at companies' ability to create wealth and to create cash flow streams for the owners of the business. So what we have to do is see how these actual political events, geopolitical events, impact those cash flow streams. And not surprisingly, they have a very, very small, if any, impact on these cash flow streams. Thus, the fundamental value of the business has barely changed. But in the short term, the prices have been hit quite hard. And in the case of the week before last, many stocks were down 5 or 10% in Europe based on what happened in the European elections and the calling for the French elections. And to us, of course, if price moves in a vastly different direction than value, that spells opportunity.
Yeah, it's interesting. It all came as the ECB was easing rates, and there's talk of the European economy more broadly on firmer footing. Where in particular does it seem as if you found some chances to get better values?
When you look at some of the multinational companies that, even though they're based in France, and of course, I'm not denying, France is facing political turmoil. Now, there's a company like Kering, which sells luxury goods under the name of Gucci, Saint Laurent, all over the world. I mean, France is probably a very, very small part of it. An advertising company like Publicis also got hit. And a very strong blue chip bank, BNP Paribas, got hit. So a lot of these companies got hit, even though their earnings should have very, very little impact. Blue chip Europe in general, if you shy away from, say, the Novo Nordisks of the world, offer some really good values, especially in the healthcare space. Switzerland has two very good pharmaceutical companies, Roche and Novartis. The United Kingdom is the home of Smith & Nephew, a sports medicine company. And these companies all have just kind of been lingering because, they're not selling GLP-1s or this nature.
Do you see more opportunity then in Europe than Asia, specifically China? I know you've mentioned Alibaba and Tencent as potential opportunities there.
If we break down Asia between emerging Asia, which includes Korea and Southeast Asia, Japan and China, I would say the opportunity set from a valuation perspective is where you can find the greatest selectively value in China. The blue chips like Tencent and Alibaba are some of their best companies, but they're also some of the lowest value. On the other hand, as we all know, we've been talking about, the Japanese markets had this huge run, and we think prices just have gotten ahead of the fundamental quality levels as defined by return on capital, return on equity. Japanese companies historically, as they do today, sell at lower, they have higher valuations than the rest of the world outside the U.S., but their quality metrics, such as return on equity, are well below the rest of the world. And the value to us is the price you pay for what you get. And if you pay a higher price and get lower quality, it just makes it harder, not impossible, but harder to find value in Japan.